Hello everyone, I hope you're well. So, structure of the video, I'm going to show you some live trading first, and then as soon as the live trading ends, I'm going to go ahead, drop some lessons, drop some value about the trades that I just took. So make sure you watch the trades that I took and then watch the lessons afterwards. Good luck guys, and I'll see you in the next video. As you can see here, EURUSD, I'm buying it through to the upside from 1.06 almost all the way up into this 1.07500 area. Now the theory for EURUSD, let's go into here. As you can see, the market was pushing through to the upside, forming trend lines 1, 2, 3, 4, 5 touches of that trend line. The market then went down into this liquidity, cleared out all the stop losses and all the liquidity below these lows. And then I believe EURUSD has the potential of starting to push through to the upside from there and target these double tops. As the market was pushing up, it formed liquidity to the downside, it formed liquidity to the upside, as you can see, almost like this triangular pattern that we did here. And then the market went to the downside, targeted the liquidity below, and I believe the market has the potential of moving up from here to target the liquidity above and go up into 1.12 almost. Let's see how it goes for EURUSD. I'm going to be doing some explanation later as I announce the result, and we'll see how it goes. So EURUSD, we're still within the same theory of the market going up into the 1.12 area, I believe. So right now what's happening is that the market pushed through to the downside, as you can see right here. Let me find my marker right there. We had these bottoms, the market pushed down, liquidated all these bottoms, then started pushing through to the upside. I believe EURUSD, after this liquidity clearance right here, will continue going up through to the upside there. Now this is my next trade for EURUSD. Let's see how this goes. Guys, I'm adding another position for EURUSD. As you can see right now, it is hitting my TP. And I'm adding another position for EURUSD to continuously buy this theory through to the upside there. Now I'm going to be really careful around this area right here, just above the 1.09051. So I'm going to copy this, bring it here, paste it. Couldn't paste for some reason, so I'm just going to mark it 1.095. So right there, 1.09051. 1.09051. Let's just change 1.09051. So right here, I'm going to be careful after this is broken through to the upside. After this is broken through to the upside, I'm going to be taking partials right here. Enough if the market came back down to trigger me out at break even. That's it. So right here, as you can see, from here into here, we have almost a 1-to-1 risk to reward ratio. So I'm going to be taking approximately 50% of the position off at this line right here. Then I'm going to let the rest run into my 1-to-3 risk to reward ratio here, into this 1.10 almost area. Let's see how this goes for EURUSD. Closing this trade right now. The US session just opened. I'm going out. It's right now, it's 4:30 p.m. Dubai time, so I'm going out, closing this trade, and heading out right now. So I'll see you guys soon and explain to you what has been happening with those trades right here. So interesting week for EURUSD. We started buying EURUSD on Wednesday 7 June through to the upside. Bought it right here, bought it again on Wednesday 14 June, then bought it again on Thursday 15 June. Now, I want to teach you guys some lessons about these trades. So lesson number one, a lot of you guys ask me, I have an entry strategy, but I don't know how to determine bias. How do I determine bias? Rule number one, use the same execution strategy as your bias strategy. This is what I do most of the times. As you can see right here, the market formed this liquidity, took it out, and started pushing in the opposite direction. As soon as it started pushing in the opposite direction, I bought through to the upside because I believed EURUSD is going to go through to the upside. How did I determine my theory? In the same manner. The market formed liquidity, took out this liquidity through to the downside, and then after it took it out, I believed that EURUSD is going to push through to the upside. So the same strategy that helped me form my bias, which is liquidity taken, then there is liquidity on the opposite side, and the market is pushing into that liquidity, helped me take my trade right here. Liquidity to the downside, taken, market pushing in the opposite direction, took a trade right here. So rule number one, use the same execution as your bias strategy. Rule number two, when I upload these trades sometimes on social media, a lot of you guys ask me the following question. Let me delete this. And you're like, Roy, the market is going up, yeah, correctly, but it's forming liquidity also right here through to the downside. 1, 2, 3, we're forming bottoms right here, we're forming bottoms right here. So how did you know that this liquidity through to the downside won't be targeted? Always take the trades in the direction of your theory. I don't give a fuck about this liquidity right here. What I'm waiting for is just a liquidity grab, and then I'm buying in the opposite direction. If the market ends up forming more liquidity here, 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 and as it's going through to the upside, I don't care about this liquidity until my theory ends. When my theory ends, then I believe EURUSD can turn back, go down, and take out this liquidity right there. However, as the market is going up towards a higher time frame liquidity, I don't care about the liquidity that is forming on the opposite direction. Always trade in the direction of your bias, in the direction of your theory, even if there was liquidity forming on the opposite side of the market. Right here, as you see, there was this trend line. However, as soon as we had these bottoms taken out and then the market moving in the opposite direction, I said, okay, that's enough for me. I entered, even though there is liquidity here. However, I don't give a single fuck if my bias is telling me to buy. If my general theory is that EURUSD is going to go through to the upside. Now, rule number 3. So this is rule number 2. Let's write it down. Rule number 2. It's always target the liquidity in the direction, this is not direction, this is direction of your theory, not the opposite. Rule number, fuck my English. Rule number 3, go all in on your winners. Alright, so as you can see, guys, I have on my charts right here like 10, 13 pairs. Let's say I trade until Ethereum usually. The others, I've added them because the students sometimes ask me about them. However, everything else from Bitcoin until Ethereum, I've added them to trade them. And as you can see, for this week, I went all in on EURUSD. The only trade that I took other than EURUSD is I took a trade on Ethereum through to the downside. However, I went all in on the trades that I have a theory on. I don't need to analyze every single day all these pairs. I don't give a fuck. In the beginning of the week, I've analyzed all these pairs and I've determined that I want to trade EURUSD and Ethereum for the week because I have fixed and solid theories on those pairs. And therefore, I will trade those pairs only. That's it. Go all in on your winners. Your theory on EURUSD is telling you that it's going to go up. Don't just take one trade. This is a mistake that even my students still make until this day. They will take one trade, for example, then be like, okay, I'm done. I made my money. I'm done. I don't want anything else. And I'm like, why the fuck did you stop? You could have made so much more money. So what I do, take one trade, done. Look for another opportunity. Take this trade, done. Look for another opportunity. Take this trade, done. And then I will look for another opportunity. So go all in, scale in on your winners. Choose your theory. That's it. Your higher time frame strategy, your theory, your bias. Then use that same strategy, your execution strategy. Use it on your lower time frames to just jump from setup to setup to setup to setup and keep scaling in on your winners. This is rule number 3. Now, what now for EURUSD? What is happening right now? Right now, EURUSD has pushed into and taken out this high and this high. Now, usually after the market for me takes out two highs, right here, my theory is for EURUSD, of course, to continue through to the upside. However, the market has taken two highs, one and two highs right here. Now, after the market has accumulated those two highs, which means those were at some point resistance lines. And as you can see, this is why the market fake tested it right here and then pushed into it. So we broke this resistance line, and then we broke this resistance line through to the upside. So buyers right now are jumping on the market, especially after the interest rate decision for the European Central Bank. Buyers are jumping on this trade and being like, okay, I want to buy through to the upside. I want to buy through to the upside. Oh, the second resistance line was broken. Let's buy more right here. I believe after taking two highs, I usually let the market pause. So right here for me, it's a no trading zone. What I would like to see EURUSD do is form some liquidity through to the downside, for example, take it out, go below this line again, maybe try to tell traders that I'm going down, and then start pushing through to the upside again. But right here, right inside this zone, right inside this area right here, for me, it's a no trading zone. We broke too many resistance lines through to the upside that buyers are starting to jump on this trade, and I believe we might need to accumulate them before pushing again into this area right here. Now, of course, at the start of every single week, so just today is Saturday, tomorrow I will sit down, I will reanalyze EURUSD and see if I change my opinion on this theory, if I still have the same theory, what happened on the lower time frames, what happened on the monthly, what happened on the higher time frames, what's happening there, and I'll determine if I want to keep this theory or not. Now, if I decide to keep this theory that the market is going up into this 1.12 area, even if I decide that, this area right here is a no trading zone for me. We just took out two highs. Two resistance lines through to the upside broken, which means buyers entered, which means we might need to just like form some liquidity, maybe liquidate again, accumulate some positions. Maybe on Monday and Tuesday, we do this. We accumulate positions on Monday and Tuesday, and then on Wednesday, we just continue pushing through to the upside. Maybe this will be the next thing for EURUSD. We'll see what happens. Anyways, right here it's a no trading zone for me for EURUSD, and this is why I'm stopping here, uploading this video, and then seeing how I continue next for EURUSD. I'll see you guys soon. I hope you enjoyed that video. Subscribe, notifications, all the YouTuber stuff. I'll see you in the next video. Good luck.